some of the big retailers and a few big tech names that are still to come. But as you can see, I'm wearing a turtleneck now. That means the weather's turned for the worst here in Chicago. And that means we're heading to the holidays. So earnings season will be done. And I won't be back until 2023. So let's make this one a showstopper here. So what stocks should you be watching this week among the retailers and these big tech names? I brought 5 names as always, so let's jump right in. We're getting a lot of the big cap retailers this week, including Walmart, Home Depot, TJX, and this one, Target. And I like Target here more than some of the others because look at this earnings surprise track record. They have a good one, except for these 2 misses in the last 2 quarters. Those are rare misses because they didn't even miss during the actual pandemic at the start of that. And so they always had this consistency, but now they don't. And why is that? Because inventory. A lot of these big retailers just ordered too much inventory because they thought there would be supply chain issues, logistics issues like we saw last year, and they wanted to make sure they had everything for the holidays. Well, now they have everything, but it's too much. So they're having to discount, and that's impacting the business here. But what does it look like on valuation now that it's pulled back? So shares are now down 25% year to date. But they're not altogether cheap because there was a premium paid for Target. It's still trading at 21 times. You do get a dividend yielding 2.5%, but the shares have kind of stalled out here and are just kind of waiting for some kind of catalyst to move higher, or maybe, further bad news to move lower. So this is one you definitely want to watch this week. Then we're going to switch over to the tech side with Nvidia. Now, I've always called this one the beast because they've got a great earnings surprise track record. Up until last quarter, they only had that one miss there in 2018. And that you can't really tell on the chart, but it caused a frenzy in the shares back then. And now we've had the huge run up through 2021, and now we have the pullback. Year to date, the shares are down 44%. They are getting a sharp bounce here off of that cooler October CPI data, and they're now up 42% in just the last month, but still a long ways to go to get back to that all-time high. But are they cheap? No, they still are not. Forward PE of 47 still with Nvidia. So still have valuation issues. But does anyone care? They seem to lately, but maybe we'll go back to the old pattern of who cares about valuation? It's Nvidia. So this is a big one. A lot of people are going to be watching. Then we're going to switch back to retail with Macys. Remember over the years as I've covered this stock for this video, I've always said, oh, the big department stores are dead. That's why the stock, even with the earnings surprises, has been down on its luck. As you can see, it was already on the massive decline going into the pandemic there in 2020. But like a lot of the retailers, as we stayed home and they delivered all of the goods to us, it did have the massive rally, which peaked in 2021. Now it's pulled back just like Target, but year to date, down only 20%. And over the last month, since we've got that better inflation data, it's up 19%. But unlike Target, Macys is still cheap, trading at just 5 times forward earnings and a dividend yielding 3%. So it's got the full package here, but did it too order too much inventory? Did manage to meet or beat last quarter, but a lot of these companies have had too much inventory, especially on the apparel side. So that's something to watch with Macys. Then we're going to switch it back over to tech. We're going back and forth here. And this one is Palo Alto Networks. And as you can see, it's one of the earnings all-stars with no earnings misses for the last 5 years. There's not many companies still sporting that record after the pandemic, but Palo Alto is one of them. What's it doing this year? Year to date, shares are down just about 11%. So not too bad, and actually beating the S&P 500. And over the last month, It's up just 6.4%. So not getting the big sell-off, but also not getting the big rebound, not considered to be as beaten up as a lot of the other tech names. What does valuation look like? Well, maybe this explains the story. It's trading with a PE of 52. So can a company survive this kind of market conditions with the Fed tightening with a PE of 52? So far, the shares have been holding up pretty well. But we'll see. We'll see on this earnings report. This is a key one to tune in on. And then we're going to wrap it up, as I said, going back and forth with another retail name, and I chose the Gap. This one you might feel surprised at, ticker GPS, because look at this chart. What a wild ride. It's had some misses in there. It's missed 2 out of the last 4 quarters, but then you get these big beats. Like 2 of the last 4 quarters. You're either getting the big miss or the big beat. So there's no real consistency here. Gap does not actually have a PE anymore because it is expected to have negative earnings this year. It's still paying that big dividend, yielding almost 5%. But with some of its other retail competitors cutting their dividends this year, I'm a little leery of, pointing out that big dividend, because how long is that going to stick around? Year to date, shares are down 30.4%. So that's what we've seen with a lot of other retailers, but it's off big off those 2021 highs. And over the last month, though, it's getting a bid up like some of these others, and it's up nearly 30%. If you bought it on those September-ish lows there, you're getting a little boost here. But this is a hard one to own for those who are buying and holding for forever, but you have been getting the dividend. At least you've been getting that. But what is going on at the Gap now? It's got multiple brands. Some are doing better than others, but apparel, very difficult. And a lot of these companies have overordered. Will they just be dumping that inventory? What's going to happen to margins? These are all my questions for the Gap this quarter. So despite all the angst with some of the retail stocks and worries about the consumer is actually holding up fairly well. And a lot of these retailers expect a very solid holiday season. We're almost at Black Friday now, and so by now they pretty much do know and have a handle on what's going on. So that's what I'll be tuning into all week. What are they seeing with the consumers and the shopping with holiday? It's already very promotional, but that was expected because they've got too much inventory. So consumers out there, you're going to get 40%. That's at a minimum, 50, 60, maybe even 70% or more off this holiday season. So what will they be buying? But so far they are still buying, and that's good news for the retailers. But we'll see. There's a lot of balls in the air, and you want to be sure to follow me on Twitter or StockTwits, depending on what's happening with Twitter. I'm also on StockTwits because I'll be posting all of these charts. I'll be tuning in to what they report, what's happening with comparable sales, with the inventory side of things, and what they're seeing as we go through this holiday season. So it's always good to get these reports right, before Black Friday and when we're getting these key data points. So there's a couple weeks here of the retailers. It's not just this week. We're going to get a lot of the niche retailers in the next week or two. So you can follow me at Tracy Reineck and on both platforms. And as always, I'll be back again next earnings season with all of the charts. That'll be for the fourth quarter, but it won't be until middle of January 2023. So I'm wishing you and all your families happy holidays, happy New Year's, and I'll see you in the new year.